Hey everyone, how's it going? It is 15 minutes after the close on a Thursday, December 5th, and it was a little bit of a snoozer of a day. The only thing that we could say about it is instead of going up, the market has come down, but just barely, just 0.16%. We can see that for the past 3 weeks, it's just been going up almost in a perfectly linear straight line. And today we didn't break that line, we just kind of chopped sideways. There earlier in the day, it looked like we might be headed for another positive day. But as you can see, we had that holiday week last week. We had Thanksgiving. We had the day after Thanksgiving was Black Friday. Black Friday was only a half day. And then the volume never really picked up this week. Yesterday, a little bit, but institutions they just haven't woken up yet. We're kind of in vacation mode still, and we're probably going to be mostly in vacation mode all the way until the end of December. We will have maybe a couple of weeks of activity, but then the holiday season kicks right back in again. So I'm not expecting a huge amount of volume to come back into the markets before the end of the year. This positive upward drift, it could continue. It's fairly likely to continue simply because we do have a bull bias. We do still have portfolio managers putting money to work. We've seen them now put almost all their cash to work, and now they're going to start supporting their trades into the end of the year so that their performance looks good and they can collect those nice, fat, juicy bonus checks. So we will expect this positive bias to continue into the end of the year, to maybe have that Santa Claus rally to really help it at the end of the year, and see the S&P reach 615 by the end of the year. That doesn't mean that we're going to continue to go straight up though. We will probably at some point within the next few sessions start to see the SPY start to flatten out and go sideways instead of drift upwards, or pull back to the EMA 8 or EMA 20. I think more likely we're just going to drift sideways for a little bit, considering that we just don't have that much volume inside the markets right now. So the theme that we're seeing is you can see that the size of these bars are shrinking from the high to the low. The high to low, you see they've gotten, especially the last 4 or 5 sessions, they've really gotten a lot smaller. So we've decreasing volatility, slow drift upwards. That's just going to make for a lethargic, kind of slow moving market. Nothing too exciting. Of course, volatility could kick back in at any moment in time. We did see that pickup in VIX starting yesterday. If you were in the Telegram channel, I talked about how we had a divergence between the VVIX and the VIX, where we already saw the VVIX start to drift upwards before the VIX did, and that was indicating that we were probably going to start seeing some volatility sometime soon. But we're still at very depressed levels. We're well below the 15. So are we going to get above 15 before the end of the year? That's hard to say. Probably not, if we're going to just continue to drift sideways and move up or sideways. If we get that pull back to the EMA 20, then yeah, probably. But if we just consolidate or just kind of pull back to the EMA 8 and then drift higher again, then we're not going to see that volatility in the VIX pick up. What was really interesting today, though, is we still have that limited range. We got a red bar instead of a green bar, but again, it was really just not that significant, mostly just chop sideways at 0.16% down. If we look at the intraday price action, what we see is that we started out mostly sideways and non-directional, and then we saw like a little bit of negative sentiment, and then very positive sentiment and back down. In the Telegram channel, right near the, I think maybe half an hour into the session, I shared how the gamma concentrations were showing up at 609 and at 606 and 604. So 6 is reasonably close. And then we backed away, and then we closed a lot closer to 606. We did, I think at the low was 606.30. So pretty close. What it indicated, though, was that it would be a fairly narrow range. So yes, we did get some sort of directionality throughout the day, but really it was in such a narrow range that on any other day we might have just called it chop. Yesterday, this portion was chop and this portion was movement, and we can see from the size from here to here, that's about the same as here to here. So really, it was just, for the most part, non-directional movement. It just kind of felt directional relative to the range that we were trading in today. It's really just not that significant. And that's why we have a small flat bar right here. So going into the end of the year, what can we expect? Well, the money managers or hedge fund managers, they're really just going to seek to keep profits moving higher. And as long as we expect another rate cut from the Fed in December, in about a week, 2 weeks now, then the market will continue to drift higher. Some people call it a melt up. I don't see a melt up happening. I see very nice, steady, low volatility climb upwards. That's what I'm seeing so far. Maybe it will turn into a melt up, but I don't think so. Unless the Fed does something crazy, like cut another 50 basis points again. I just don't see that happening. So we can just expect that kind of movement. Now, what kind of sectors do we want to be in? That's going to be more critical, because now, more than we've seen in the past, we're really starting to see that divide and become more clear. So let's take a quick look at that and look at our sectors and see where money is flowing. Okay, you can see that XLY has been doing excellent. It's on a tear. We do have Lululemon coming out with their earnings tomorrow, and that's going to be fairly influential on the consumer discretionary market. But you can see that a lot of these retail stocks, they've been going up, and they've been the high performers. The strength of the dollar means that people can consume more, and that has helped that particular sector. Communications has done really well as well. Financials is starting to fall off a little bit, and it looks like it's going to find some support at the EMA 20, but if it falls through, then we could have a pullback to that MA 50 right around 48 currently. QQQ Tech is leading. Mag 7s largely dragging the markets up, but consumer discretionary definitely helping as well. And then let's see who else. So small caps not doing so great. They're okay. They're fine. They're at highs, but they've been chopping sideways for the last couple of weeks, unlike the S&P 500, unlike the QQQ. So the focus really isn't on those small caps yet. So we're not in full bull mode. What we're looking at is portfolio managers are looking for nice performers, safe havens, large cap stocks to park their money to get extra alpha into the end of the year. So you're not really seeing that translate into small cap stocks. And let's take a look at, and you can see the Dow Jones, same thing. We're looking at the ones that could give us some yield right here. And the Dow Jones just aren't those stocks. So the concentration is on those growth stocks, on the large cap growth stocks, the QQQs and the XLYs. It's looking like consumer discretionary, non-retail stocks are the ones that are doing well. And let's take a look. Biotech not doing so well. Basic materials not doing great, but not quite bearish yet. And then healthcare really looking like it's starting to turn over, breaking through some key levels here. Looks like it's going to start heading lower and retest those lows. So definitely weakness in the healthcare sector, and that's probably where I'd be looking for shorts to balance out any longs that I go into in consumer discretionary and communications and QQQ Mag 7 type of stocks. Okay, so that is pretty much it. We just expect this to be lower volume, lower volatility going into the end of the year. Maybe a few exciting days here and there, but for the most part, things look like they're going to be muted going into the end of the year while we wait for some sort of Santa Claus rally to potentially start. Then we might see some volume pick up, but with fund managers almost fully allocated, what's left over is just going to be, for the most part, for protecting their positions so that they can have a good performance by the end of the year.